Ngowi TV, informed economists and business perspective.
Minerals like Tanzania, in terms of incentives, how do they mingle about it? How much of incentives do they have to the investors? Are we in the right track in terms of your experience in terms of what is happening around the world? So just to get the picture. Number two, you talked about tax avoidance, and your opinion was that since this one is legal, we should not do advocacy on it.
No, get me correct.
Okay.
Don't put too much effort. If you have to divide the effort, if I put, okay, sorry, ask your question first because I don't like to cut you short. Sorry.
Just go with the question one, and then number two, you can just share some ideas.
Sure.
Thank you.
My friend, Police Forum.
Thank you. A question from you as an economist, in terms of incentives, because you say that the main goals for the incentives is to attract investment and to retain that investment as well. So, is it right for the game to be changed in the middle? For instance, if you granted this kind of incentive 3 years ago, and then you want to change in between, how does it fare from the economist point of view? But also, on the long term, what kind of implication does it have if that to be the case? The third part, I just from the terminology that you usually use, the benefit foregone and things like that, should we also be able to account for such incentives as a economic, as a loss, whether from the tax perspective or either way, for the case of budgeting and things like that? Should we also put as a loss or a gain?
That was the last one. Then we go to Janet.
Thank you. Mine is from a practice perspective. As a lawyer, I'm facing a lot of my clients claiming, especially for the operation of two sectors in a country. We have what we call a formal sector, that where businesses are registered and paying taxes, and we have those informal, which are not. And then all are operating under one umbrella, under one environment. For example, in Kariako, there are a lot of matching out there with the bags and whatever, and the other business persons with premises. They have rented, they are paying tax and whatever. Now all are selling the same products. And at the end of the day, these registered ones are paying a lot of taxes. And this one informal, they're told, okay, these are have not to be touched. These are wajasiriamali wadogo, just leave them to sell. But we all sell the same products. So there are a lot of people now are claiming this. They were formal, but now they start to come informal. Yes, I'm telling you, with a serious note. And then at the end of the day, we are starting now claiming that mapato are getting down and whatever. But what is there any initiative now to make sure that if it is that, now we operate under one umbrella, all businesses and whatever, to be formal or to be informal? Yeah, so that to be on the same page. Are there those initiatives? Thank you.
Janet, that will be the last one I have.
Yeah, if you compare tax incentives as a method or strategy of attracting investors and retaining investors, if you compare it with other ways, or let's say, other factors such as resources, like people come to Tanzania because we have minerals, or let's say if we have enough, proper infrastructures like transportation, electricity and all that. If you compare it, if you can rank it, how high or how low does tax incentive fall in those factors if you compare them with other factors? I just want to see the importance, like, does tax incentives really attract foreign direct investment?
Good. And
I don't get this question. It's like you said, the tax incentive was used to attract investors in the 1980s.
Yeah, mid-1990s.
Because of our economic structures and the poor infrastructure and whatever. Is it still relevant even today?
Thank you, thank you. Now let me start with these last ones. Not because they're coming from the ladies, but because they're very important questions. Of course, all equivalent. So, and thank you, Janet. Thank you for the question. I should have really talked about this earlier. You could see, when it comes to incentives, studies have shown really tax incentives are not the only things that will be attracted and retain investors. It's just among issues. And of course, investors even have been interviewed. There are some studies from Harvard, for example, and elsewhere. IMF even Bank will show you that tax incentives really are not the ultimate things that make investors come. They are, but investors will say, well, tax incentives is not the thing that will kind of make us come in the country. But if you give us incentives, we'll not say no. You get my point, you know? So from a theoretical background, investors do go into a country for three major issues. First, there are what we call resource-seeking FDI, resource-seeking investors, resource-seeking foreign direct investment, and I've written substantially on the FDI subject, you know? So those are those who will come because of resources. Whether there is war, there is no war, they will come because of gold, because of mineral, because of oil, because of gas, because of the forest, because of XYZ, you know? Those are what we call resource-seeking FDIs, resource-seeking foreign direct investment. We will see them in Angola, whether there is war, there is no war. We will see them in Congo, we'll see them wherever because of resources. The other one is what we call market-seeking FDIs, market-seeking foreign direct investment. Those are investors that will come and invest in a locality just because of the market, you know. And this could be the question of size of the market, purchasing power, you name it, you know. They will come within East Africa, just because of this enlarged East African market, because they want to sell, you know, their goods and services that they are producing. So you could see, we have not mentioned the question of tax as such. But then there are those who will come because we call it efficiency. Efficiency-seeking investors. Efficiency-seeking investors, those are the ones that will invest in a locality because of efficiency. They can, you know, transact efficiently. There isn't so much bureaucracy. There isn't so much corruption. There is, you know, those kind of stuff. And these will normally go to, you know, high developed economies, you know, where things are fast, things are very accurate, etc., etc. So, to answer your question, and partly to her question, really, tax incentives is just one of those many other incentives. You could see, you can talk about this in the context of what we call investment climate. The World Bank gives what we call investment, you know, ease of doing business report on annual basis, and I've been going through them over, I think, over 20 years or so, where issues really of taxation are just, I'm saying just some of the issues that they'll be talking about. And even taxation, they'll talk about fiscal regime, and issues may not be just on incentives. Maybe they may be irritated over high tax rates rather than incentives. They may be irritated over what we call a tax refund. They may be irritated over what we call a predictability of fiscal regime, whether the tax that we are given today will last for 2-3 years or not, rather than the tax incentive. So you could see really it's not. Again, they will be more concerned on infrastructure, broadly speaking, what we call traditional infrastructure, things like roads, railways, ports, airports, but also soft infrastructure, things like internet, connectivity, security, you know, that kind of stuff. They'll be concerned with issues like what we call skills and talent in the labor force, the extent to which they can really hire adequate, highly qualified human resource in the economy, rather than the tax issues. They'll be talking about utilities, you know, the extent to which electricity and water will be hooked into the investment quickly. They'll be talking about policy predictability. They'll be talking about stability. So you could see really a tax incentive is just one out of those many things. I cannot give a ranking as such. As a responsible scholar, if I give you a ranking, then it has to be researched for. But I know, go and do your homework, you'll find it somewhere. It is not really a ranking on the top, really. It's not. So similar to your question, agriculture and the the environment, you could see exactly the same. Yes, you know, Tanzania started giving, rather granting incentives almost 30 years ago in the mid-1980s, And the debate among issues of concern has been, is it still relevant today as it was 30 years ago? Have things not changed on the ground? Have we not improved, for example, when it comes to issues like human resources, infrastructure, what you call a social amenity? And a social amenity is this situation where investors will say, yes, I want to come to that country, but are there good schools for my kids to study? Are there good hospitals? Are there supermarkets? Is there peace and security? And we understand over years, really, things have improved substantially. Those of you who are under 30, you may not recall how this country was in the 70s, in the 80s, when it comes to availability of goods and services. Sometimes when we went abroad, we had to come with toothpaste, because it was not available in the market. It was not given that you wake up in the morning and just get sugar and soap and everything. I left this country once and then I came almost 5 years later. But then when I left, I came with my kids, and then we thought that we will not get things like juice, like pampers, and we took stock for a whole month, only to find everything was here. Are you getting my point? So really, things have improved. The international schools that we are seeing here, we are not there yesterday, and my yesterday is 5, 6, 7, 10 years ago. So in my view, yes, things have really changed, and we should have adjusted accordingly in the incentives. And this is exactly what even you read the speech by the Minister for Finance. They will say they will be rationalizing the incentives to match with the real situation now. So I think you have partly answered this. On the question of I think on incentive on oil and gas, etc., etc. Yes, I think essentially we have incentive in all sectors, but of course in some sectors, for example, oil and gas, there has been specific incentives towards those sectors. For example, oil and gas, you're saying it's a new sector. Again, we have to give extra incentives for that, and this has been the issue. Of course, even the extractive sector, in the mining sector, for sure, there has been a lot of debates. You could see there have been issues with special mining agreements, where yes, we have the general incentives, but then we have specific agreements on mining centers. So I think, yeah, those are part of the issues. Now, to come specifically to your question on your question on evasion. I mean, where we put effort more on tax evasion or avoidance. Exactly what I would say. I'm not saying that you should not talk about tax avoidance. Talk about it, lobby, and you are doing lobbying and advocacy on those issues. But in terms of problem, tax evasion is a bigger problem than tax avoidance. Yeah, it's tax avoidance, because however much you do, my friend here is a tax consultant. People will go to tax consultants to teach them how to do tax avoidance legally without really breaching any law. And I'm sure you are not here for that purpose, because but on a serious note, you get me, my friend. I'm not saying that don't do that, but the question of balancing your effort. I would put more effort on aversion, I would put more effort on incentives rather than avoidance. But I will not leave avoidance altogether, because again, there are issues where you can say, well, let it now be, correct avoidance. Policy forum, again, on incentives, I think changing game at the middle. Now you could see, I'm getting your point, and this is where the question of predictability comes in. Part of the thing, if you read World Bank's reports on doing business report, if you read OECD produces a report called the African Investment Forum, Climate, something like that. If you read Best is Business Environment Strengthening for Tanzania and the TPSF, Tanzania Private Sector Foundation, they have been giving papers called, Business Leaders' Perception to Doing Business in Tanzania. If you read Ngowi 2016, and I'm that Ngowi, I've written substantially on business environment. Issues of predictability are extremely important, So it's the same on incentives. Investors will tell you, yes, these are the incentives. How predictable are they? Are they going to last for 2, 3, 4, 5, 6 years? When you change games, we say when you change the rules when the game has started, it disturbs the equilibrium. I do teach production economics, and I do teach what we call a long-term investment analysis. And a long-term investment analysis, as an investor, I'll be looking at what we call NPV, net present value. I'll be saying the money that I'm sinking in today, how much is it worth can be 10, 20, 15 years ago, and I mean 15 years to come, and I'll use the current figures. They may give me a positive net present value. If it gives me a positive net present value, I would invest. If it's a negative, I will not invest. And if I have a couple of investment portfolio, I will choose one that gives me the highest NPV. I'm sorry if I'm going too technical, but that is it. I don't know your background. I'm assuming you have some background of those issues. But Janet, another session for NPV issues. So if you change now the game, to answer this question, I want to answer it scientifically. If you change the game, it may also change the figures that your NPV is giving, and that's the disturbance. So I would say really, that's why we see sometimes rules may change, regimes may change, but we'll say they may not act retrospectively. We will say they will apply for those who are coming to invest from today on. From the perspective of business environment, business policy predictability, that's what I would professionally say. You know, it cannot really go backwards, because when I made my decision 5 years, 10 years, I made based on what was on the ground then. If you change at the middle of the day, it's tantamount into changing the rules of the game when the game has started. Some of you are doing good governance, that won't be good governance, you know. You know, again, the question on, you had a question on, you know, the question I think on, yeah, I think that's predictability, yeah, cost-benefit analysis. Yeah, of course, I would say, once you are foregoing, when you are giving incentive, tax incentive, you are foregoing current resources, you are foregoing current revenue, you are foregoing current taxes in expectation. And the way the expectation is written in capital, it is underlined and it is bolded. In expectation that the sacrifice, the tax that I'm foregoing today, it becomes a liability, actually, becomes a liability, will give me an asset, will give me profit in the future. And this profit should more than offset the liability that I incurred today. Now, whether this is what is happening, this is really still the area of debate. Yes, I give you incentive, I forego, I sacrifice taxes worth 100,000. If it creates in the long run, after 5 years, when you start now paying taxes, if at the end of the day it gives me more than 100,000, it could be okay. I'm foregoing this incentive for you to produce in the export processing zone so that you export. If you export and again I get foreign currency, which is more than the taxes that I forego, then it's okay. If I forego these taxes as a liability and it gives me asset in terms of direct and indirect employment, which at the end of the day are bigger, are stimulating the economy, are trickling down, rather than the tax that I sacrificed, that should be okay. As you can see, it's really a quantitative issue that we need figures. I'm sure if you contact Dr. Mero, he is now at the Minister of Industry, Trade and Investment. When he was at Export Processing Zone, I think there was this debate, and I think there is a study, maybe they have done some study, which would show for every tax revenue that was sacrificed at the Export Processing Zone, how much foreign revenue has it generated? How much jobs has it created? The same could be done at Tanzania Investment Center. So, those kind of stuff. Now, I think that was the last one. Yeah, tax consultant. The question, the former and the against the former, I think those are the big issue here. And I'm sure I'm not answering the question for your client, and then you get paid. But it's okay, my friend, because that is why Walimu are here. So on the formal and informal sector, you know, yes, always there will be a debate on the formalization of the informal sector, taxation of the informal sector. What has been the trend is those in the informal sector, the argument is they are consuming public goods and services anyway. Yeah, they are using the roads, the ports, they are using security, airports, they are getting education sometimes, but they are not really paying tax. And of course, it's wrong to say they are not paying tax. What they are not paying tax, well, they are not paying maybe is direct taxes. You know, they are paying all these consumption taxes. When they drink water, they pay with the 18% that is there. But I get your point. If they are trading in front of my shop in Kariakoo, where I'm paying taxes, really this becomes a problem. And that's why I think when it comes to formalization of the informal sector, I have a book chapter coming. We are writing with some colleagues in Italy. There is a debate whether we should formalize the informal sector. We have come to a conclusion that the informal sector will be with us as long as the world will be around. We cannot really, yeah, you know, that's a fact. Almost 60-70% of people are in the informal sector. Now the debate now is, let us tax them amidst informality. And that's why we are having things we call a presumptive taxation. The right people tell you, maybe we can give what we call presumptive taxation. We kind of estimate the amount of tax to extract from their businesses. Maybe that's a way to go. Of course, as long as we move on, we may incentivize them. We may give them incentives, not tax incentive to formalize their business so that we can easily capture them in the tax net. And this is a new debate altogether. Because I've talked and I've written on taxation or on the formalization of the informal sector, and I've said when it comes to formalization of informal sector, it should be what I call a stick and carrot. Stick and carrot, really. We should not punish them in order to formalize. Let us show them the benefit, the advantages of going formal. And you can see it's a whole debate that we cannot open here now. But I agree with you, those who are trading in front of my shop, I'm paying taxes, they are not paying taxes. It's not fair. It's not fair because at the end of the day, if they are not paying 18% VAT, if they are not paying 30% you know, corporate tax, their goods will be much cheap. When they become much cheap, you know, I won't be selling. If I'm not selling, a taxman won't get his revenue. So at the end of the day, really, it's no good in terms of good business environment.